What's up, everyone? In this video, we're going to be doing the weekly recap of the stat modeling strategy. Today is January 8th of 2022, and we had an interesting week. To start the week, the market was holding up pretty well. There was a good amount of bullish activity, but on Wednesday it was just brutal. Stocks just tanked to the downside, and then Thursday and Friday there really wasn't too much movement. But what's interesting is that we are seeing some stocks do very, very well, and other stocks kind of tank down just a little bit. So, like for example, we'll see Apple and Microsoft definitely pulling back, and this is definitely pretty rare. While we're also seeing AMD and Nvidia pull back. But on the other side, we're seeing bank stocks like JP Morgan explode up. We're seeing Boeing explode up. I mean, even the growth stocks are having a decent time. Beyond Meat's doing well. DraftKings is doing pretty well. Corsair's not looking bad either. So, like, it's weird because some of the major stocks like Apple, Microsoft, and Tesla are tanking down, which is really hurting the market overall. But this seems to be pretty good for growth stocks and value stocks that haven't really ran up over the past year or so. So it's interesting to say the least, and we'll definitely rotate as necessary. But let's get right into the recap for this week. So looking at the swing trades, we have a good amount of plays open. Some are down, some are up. A lot of them have time, and that's the main thing. We have Beyond Calls in the works. We have Corsair Leaps in the works. A Twitter play, SMH play. We have a lot of different plays right now, which is a good thing to have, in my opinion, for this market. As we can see, just looking at the S&P 500, it's been all over the place, and it's weird because it's not like we're seeing a full-on crash, so we have to play this in a unique way. So for that reason, we're having some SMH puts to play some of the downside on the chip stocks, which is looking pretty good so far. At least the movement has been looking very good over the past couple of days. On the other side, we have like Beyond Calls that had a really great Friday, like in the afternoon, but it pulled back a little bit. But either way, it has like a pretty high short float. It's at a major support level with a pretty big catalyst, so that's awesome. Corsair Leafs, it's at a good level. IV's low, and looks like there's definitely a nice potential for a pop there. But overall, we just have a lot of plays in the works, and some plays are bullish, some plays are bearish, and some are just neutral. So that's awesome there. Shifting over into the bot this week, it really wasn't anything great this week. There were a couple decent plays and a couple duds. If we start off with Monday, PayPal was decent. It popped for like 30.8%, which, it's not amazing, but it's okay. This first VIX play, basically the same thing. It basically popped for like 30%. Then the Zoom play, that one was a dud. PDD on Thursday was really awesome. It was definitely the play of the week. And then the VIX play on Friday was definitely a dud. So we had two duds this week, and then one pretty solid play with PDD, and then two just okay plays. So, it's just an okay week, we can say. For 2021, the average pop is 33.6%, which is definitely very respectable, but we'll average out, theoretically we should average out to that number or higher over time. So that's good, but either way, it definitely was not an amazing week. So we'll say that. And then if we shift over into the theta plays, it's pretty slow and steady as usual. Selling put options, selling call options, call credit spreads, put credit spreads, iron condors, anything with like theta or premium selling is a really great strategy to use, especially when implied volatility is high. And that's what we're seeing with some of these companies. So for example, if we went to like, let's say we went to like AMD, let's shift over into Teladoc right now. So Teladoc, it's at a really low level, and let's say you were bullish on this company, you can buy call options, and that can be great. But you would probably be better off by selling put options because the implied volatility is high. It's at 67%, but it's also high, like in the high percentile. Like it's higher right now than it has been for a good, I guess you say, over the past year, if we say that. So the main point is that when you see stocks with high implied volatilities, yes, you can buy calls, you can buy puts on them, but it would be smarter to sell, sell the put or sell the call to capture that, I guess you'd say, premium in profit off of the overpriced option. So, yeah, I hope you learned something from this video. Thank you so much for watching, and I'm excited for next week.